my absolute pleasure to bring our first panel to the stage in a panel discussion that I'm extremely passionate about. We're going to be talking about the rise of neobanks, and I'm honored to bring Vlad back to the stage, as well as Armin Mayer, and we'll get this panel started. Thank you, Genevieve. I think we lost a mic. Yeah, I got you.
1, 2.
All right. So before we get started, I think a really interesting fact, I call it microbanking. You know, so many Americans are using what I call microbanking. They have their core bank, but they want to figure out what's the fastest, cheapest way for them to invest. What's the fastest, cheapest way for them to do their expenses with their business? So they're utilizing like Robinhood, Greenlight for their kids to send them their allowance on a weekly basis. So they have their core bank, but they've got these micro relationships trying out different ways to enable faster, cheaper, more personalized experiences, kind of like how Amazon's treating them. So it's a fact that in 2023, 40% of Americans are touching some type of neobank, either for their personal, their checking, some type of expense tool, some type of investment micro infrastructure. So when we have this discussion on neobanks and and how this micro banking infrastructure is working, first I want to describe what is a neobank. If you don't know, there's so many terminologies in the financial ecosystem. Simply, neobanking meaning that there is no physical branches, that the organization running a neobank is focused on technology. Faster, cheaper, more personalized infrastructure is a neobank. Netevia actually has 2 enabled, and we have some announcements on enabling a 3rd. So I would love to get started by having Vlad, followed by Armin, explain to us a little bit about what do you do and why are you so passionate about neobanks? Vlad, over to you.
Well, I think that, neobank untangles things that previously were cumbersome, and you had to go to the branch. And you don't have to go to the branch, and you can rely on technology to make it work. I think my first neobank was, for some people it was Venmo, for me it was a Cash App. Cash App has 70 million users, 70, and it's counting more and more, right? It's a classical example of a consumer neobank done right? I use it, many other people use it, and I think it's just a great value proposition for somebody that wants to store their money somewhere or have the money transferred peer-to-peer. Obviously, Venmo did a great job. PayPal did a great job. But for me, Cash App is one that I love. Outside of course, Zelle, which is sponsored by banks, that did it in advance to be able to do this. And if it wasn't for Cash App, Zelle would not exist today.
Yeah, that's a really good point. I think every layer of innovation drives and inspires the next layer. And I think we're going to dive deep into this discussion in the next 30 minutes. But Armin, you've touched a lot from your background, and love to get a little insight on that for the audience.
Well, thanks for having me here. I saw up there you have American Fintech Council, okay. I co-founded a trade association of about 100 fintechs, some in payments, some in traditional banking that are looking to partner with fintechs to enable themselves better, some coming out the other direction from the technology side to become what we're calling here neobanks like Chime, and of course some of the companies in this room. But before that, I was Lending Club's head of regulatory strategy, kind of helping answer the question for not just Lending Club, but other fintechs in the ecosystem. Do we want to be a bank ourselves? And that's a perilous road, but potentially a profitable one, depending on why exactly you would want to be a regulated entity. And it was a joy achieving that goal at Lending Club. We decided it was the right move for us. We did become a bank by purchasing one, and it has helped our business. I don't think it's the proper road for everybody, but it's something worth exploring. Before that, I was a managing director at PricewaterhouseCoopers advising banks on technology issues. So it started kind of with the big banks, went over to Lending Club, as small tech companies becoming banks, founded a trade association, and then earlier in my life, I was a regulator and became chief of staff of New York's bank regulator, also its fintech and non-bank and crypto regulator today, called the Department of Financial Services. Don't want to bore you anymore with that, but I want to pick up where Vlad left off and why I'm excited about all of this. So it is 100% true. Zelle exists because of fintech and people in this room. The banks have been slow. They've been stuck in old ways. We can go on for a long time about the reasons that's true, but it's not just payments. It's not just payments. We saw when Lending Club came on the scene, using tech to provide lower cost loans, reaching more people in areas that have been underserved, guess what? Suddenly, Goldman Sachs wants to get into it, and they hire half of Lending Club's employees, and they try to get into it. Guess what? When Lending Club and all sorts of new companies that came in, Marlette, SoFi, Avant, started undercutting credit cards, which were charging way too much. Guess what? The credit cards started undercutting themselves before we could even get to them because they realized they had no choice. So this story is an endless story of technology leading the way, and maybe, and we'll talk a lot about it, but maybe the story ends with banks actually doing better, and that would probably be good for everyone and would make competition even better. We'll talk more about that.
Yeah, I think that's such a good point when you talk about lending. Just largely, there's a stat that in 2023, $15 billion went through a neobank execution in the United States. Faster, cheaper enablement, and that's fueling the GDP growth, right? When there's faster capital, faster access to capital, that changes the game. What I want to dig into is, I wanted to highlight, what do you think that one moment that accelerated neobanks in the last 10 years? What do you think that one pivot that changed the behavior to get consumers to move from traditional to start trying and utilizing neobanks? Maybe Vlad, I'll come to you first.
Well, I don't know specifics outside of the fact that all of a sudden people were downloading the Cash App again. But I can tell you the moment that I realized that we needed to build a neobank. And it's a famous story. I've said it a number of times. I had a 20-year relationship with Chase, and they called me up and they said, "We're going to close your account. You got 30 days, and we consider you a competition." And all I was doing is accepting merchant commission residuals onto my bank accounts. Didn't thought I was a competition. And reality is that sometimes it's one bitter person that get this type of response does something about it. And so the reality is we're now a neobank, and we are a competition.
Yeah, I love the catalyst, right? At the end of the day, you try and pull this from me, and I'm going to find a path to the future. Armin, do you have thoughts on what kind of kicked us from a consumer change perspective?
Yeah, I wish there was one exact moment, but I think that there were the same moment that occurred over and over again. And it was that moment of delight as a customer where you got a different kind of service. So if we go way back in time, as a small business, in the early days of fintech, there was a company called Cabbage and On Deck, and finally a small business didn't have to go to a very high price lender or a merchant cash advance, but they could get a loan quicker using technology and advance their business. And then on the personal side, I'll put Lending Club and a few others in the category, but more importantly, we saw Varo. Varo said, "You know what? You're our customer. We're not going to screw you, unlike what happened to you. That's terrible. We are going to not charge you overdraft fees. We are going to not hold for 2 days the funds that you deserve. We're going to advance you those funds. That's only because of slow payment rails. You're not getting that money. You need that money. We'll advance it to you." We can go on and on examples like that, but I think over time, demand for better increased. And what we've seen in the past 10 years, in part because of people in this room, and I think because of the members of the American Fintech Council, supply is catching up. Expectations have risen, and banks are getting into it. Banks bought Cabbage, banks bought On Deck. More products are coming in, like earned wage access and BNPL. and they're being brought together holistically. And I think customers are getting more and more delighted. So demand came first, those moments of delight, and supply is following, and banks are doing better, but there's a long road ahead.
Yeah, I think it's kind of dignity, right? As a business owner, if you need money, you want a fast, simple way to share that data and get qualified. You don't want to go in and have that experience where they're asking you for 15 different documents and it's sloppy. And then it takes 25 days for them to make a decision. This is like advancing that access point and creating real relationships. Speaking of relationships, banks and fintechs compete large level, but there is some magic in banks and fintechs partnering. What do you think that one aspect of an example you can share that you think really accelerated a bank and fintech working together? And why do you think it's so important that they, even though they compete, how can they partner?
Well, first of all, we're a very unique country, right? So if you go to Europe, you'll quickly find that in majority of the smaller countries in Europe, there's one or two banks that dominate the market above 50%. In our country, yes, we have banks that dominate the country, but it's not one, it's multitude of banks, number one. And number two, we have almost 20,000 banks in this country. That's insane, right? And they're all fighting for being able to service the customer. Now, the biggest problem in doing that is they all have different budgets. You can't compare a local bank with a budget of Chase Bank or Bank of America for that matter, right? And therefore, the local bank needs to decide how are they going to spend their time and resources, and how can they get to market. So if you're a local bank, let's say somewhere in, let's say Detroit area for argument's sake, or Washington, D.C., and you want to get a customer in Arkansas, before you had to open up a branch, and that's the only way you can do that. Today, you can do online banking and be able to market to that customer in that state and not have to have a branch. Now, the problem is that local bank has been busy servicing local customers as part of their doing business, and for them to switch over to market to another state, let alone the entire country of other states, is a monumental task. And that's where the marriage is, because fintechs and applications and developers on those applications, they're used to marketing in the Apple App Store all day long. They know how to do it. They know what it takes. They know what type of experience they want to bring to the table, right? And then, but they also need licenses, financial infrastructure, and nowadays some oversight to be able to accomplish the money movement tasks. And that's where the marriage happens. And thankfully, to a certain degree, we have to thank the amendment that happened in 2013, the Dodd-Frank amendment. On one side, it limited the debit card interchange to the larger banks, but it left smaller banks with their share of interchange. And that interchange is now an asset that a smaller bank has that they could literally give to a good marketer that can build a good application experience, and that's where the marriage and the magic happens, in my opinion. So, case in point, love to discuss again my lovely Cash App. They are partnered with the same bank that we're partnered, Sutton Bank. By the way, that's our choice, was primarily driven by my love for the Cash App. We partnered with Sutton Bank in the same fashion that Cash App partnered with them. And it's a little bank in Ohio that is now processing billions of dollars around the country, thanks to the Cash App. Thanks to the fact that when you log in, you see a beautiful interface, you see a beautiful ways of transferring money and adding your family and adding your kids in it, and now selling crypto and doing some other stuff there, right? And in the back, there is a bank with licenses providing financial infrastructure and making sure that that whole thing stays intact and works, and licenses are not revoked. So that's the partnership.
Yeah, and I love that you mentioned Sutton Bank because they're a BIN sponsor bank enabling prepaid, enabling credit infrastructure to allow that interchange to be a profit center or an offsetting cost for businesses to become neobanks and to have these microservices with their brand on it, like Netevia. That's a great way to describe that bank fintech partnership perspective. Armand, do you have another example?
Well, I like the dichotomy between the biggest banks, let's call them the top six, because that's, and then it kind of falls off the cliff, and you have the remaining 5,000. And I think, yes, there is more competition, to Michelle's point, when it comes to the ecosystem of technology companies and neobanks and the top six. There's also some cooperation that, again, these are the banks, these large ones, that are buying, IPOing, and really learning from these fintechs. But yes, ultimately it's probably more of a competitive and a cooperative experience. Where the cooperation begins is, as Vlad says, as you move down the spectrum. And I think in the non-payments world, some of the cooperation we've seen some most successful involves banks like Sutton, and there are maybe a few dozen of these. I would say they're almost all members of the American Fintech Council. The easy examples and the earlier ones were on the lending side, where why would you partner with a bank on the lending side? You get basically three things, right? You get a clear regulatory environment because banks are regulated nationally. Even a state bank is regulated by national rules for the most part. And what does that do for you as a lender? It means that now you can invest nationally. So Vlad made a good point of how hard it was to go across state lines. You might have to build a branch. Digital helps that greatly. What also helps that is consistent regulation, because 50 states are hard to ensure operational risk does not occur, things don't break, you don't make mistakes. And having a national bank partner or even a state bank partner helps greatly to manage that risk. Also, you get, to the extent deposits are important to you and your business model for funding loans, it's great to have a bank for deposits. And banks bring risk management that the fintechs do benefit from, even if they don't like it all the time, they do benefit. So examples there are Celtic Bank, FinWise Bank in Utah, First Electronic Bank in Utah, partnering with all sorts of fintechs that we could name. Lending Club had WebBank for a long time in Utah, in order to create a national model of what a loan could look like that really, I think, made credit cards better and made the big banks better as well. On the other side, you have a more recent phenomenon, which is the Chimes of the world, the Mercuries. So Mercury and Chime, I'd say, that are the examples that most know about, where you're not really lending, you're more providing a great experience to a customer, but you need that bank to collect the deposits, to put them somewhere, to have the payments rails. And Chime has a couple bank partners, Mercury does as well. One of those is Choice, for example, in North Dakota. And Mercury caters to small businesses. What does it do? It does what a bank's not so good at. That interface, that make your life easy, that think about your needs first. And because it's national and not state by state, it's national, you can invest heavily because the market will pay you back. You got 50 states, not one state market. So like this nationalization of fintech and banking, because of what Vlad said, has allowed more investment and better service and more competition.
Yeah, it's like white labeling a phenomenal service and then putting your brand and your touch on it so that that consumer experience is what you're really working on. And the regulation and that partnership is alongside the bank to drive out scale. So I think my next question is, how do you scale a neobank? Like, what are some good examples of how to drive adoption of a neobank, even in an example to Netevia, and how you guys are growing your consumer and your business product?
Well, so in Netevia, the way that we look into scale, especially in 2020-25, is the speed at which we could create additional programs starting from zero is, nothing short of impressive. We started with one program, just a regular business debit card, maybe about a little over a year and a half ago. we're going to have, by the end of this conference, 4 different programs in the market addressing different needs of different clientele. Plus, in a short period of time, we have seen our solution being used in so many different verticals that because we get data that is sitting inside our systems, and because we're tech savvy compared to the bank that maybe has 1 or 2 people in the technology department, we get to analyze how people are using their spending habits much more carefully than the local bank ever would. The examples that we've seen is astounding. And it's each individual use case that all of a sudden mushrooms into this, super business that now, myself and the management team of Netevia loves and we want to support, that people would never be able to get anything close to that if they were in the local bank or they were in a national bank like Bank of America or Chase. And, if it was one example, I would tell you, okay, it's an odd one. But as we grow, we just able to get these examples more and more and more. And those examples and letting us focus on some of these use cases are what's driving our growth. So specific use case growth is probably the biggest growth driver for Netevia today.
Yeah, finding that niche as like a micro bank, right? Like you're offering these different services to cover different use cases. I'm going to...
The services are the same, actually, Michelle. We're providing card spend and use cases. It's just how do we approach an individual business type, an individual use case, and what are we allowed to do, and how do we advocate for the customer that the normal banks don't do.
Yeah, fair. You're kind of doing the Amazon approach. It's more personalized and it's trying to target what their challenges are. I wanted to pivot into AI, largely because it is the core of many of the aspects of what we're talking about over the next couple of days. How is AI going to change and enable growth in the neobank infrastructure? And I'll start with you, Armin.
Yeah, I think there are some real use cases today, and there are some speculative use cases that aren't here yet, but many of them will be. And it may not come as fast as we want, but they're coming. Starting with the ones that are here today. And we should distinguish generative AI versus traditional AI. It's kind of amazing that AI was all the rage 3 years ago before Gen AI, and now we're calling it traditional AI. But anyway, so generative AI has changed the ballgame. Banks and financial services firms, and probably Netevia, is experimenting. How do we analyze how we're talking to our customers? How do we, in an ideal world, create the ultimate customer service representative, looking at all the transcripts, all the interactions, and create people who can really delight customers with the best experience, with the right answers to questions, in the most easy to consume way. We're not there where we have that agent, but what we do have is with Gen AI, the ability to categorize and understand where our agents do well, where they don't do well, how they can improve, create training modules quickly. So I think we are, once we get through some hiccups and hallucinations, going to see customer service get better drastically because of the investment that's going to be inevitable in making our customer service agents better, and ultimately over time getting to that ideal state of a largely, if not completely, AI customer service agent. We're also seeing on the other end, involving customers, but more regulatory, a company called Spring Labs, for example, is probably the leader here in California and Utah, looking at complaints they're receiving. How do we do better? How do we look at the early warning systems, not just from the calls we get in, but actually the complaints? And what's filed with the regulators, my old one, the DFS, or the CFPB, or with us directly. Let's see what these complaints are saying before we have regulatory problems, before customers are crushing us on social media. Let's analyze what they're telling us, what we're seeing on social, and let's categorize it, and let's figure out where we can fix things quickly. Let's identify common themes and common vendors who need to do better for us. And we're actually seeing today, and we're hearing, I think, great news that Gen AI can categorize correctly and assess correctly up to 90% of the time without human intervention, what's going on in customers' opinions that's reaching the bank or reaching the fintech. We can keep going. I'll just do one more example. I am pretty encouraged by what we're seeing in underwriting when it comes to AI use. I don't think we're at a world where generative AI is going to issue loans. We're far from that. It's a little scary and a lot of legal issues. But we are at a world where Gen AI can take in data, especially small business or business data, which is harder to underwrite than individuals like us, because the data is different, there's more of it, it's more qualitative, and categorize it, understand it, analyze it, and use it as the basis for a decision, but not the ultimate decision. And we're also seeing Gen AI's ability to analyze kind of market trends. A company called Credibly is doing this well, analyzing market trends to help make business decisions as well from publicly available information or proprietary information in databases. Anyway, those are some examples I'm pretty excited about, and it's kind of an endless amount, frankly.
Yeah, we're running out of time, but Vlad, I want to get your thoughts, because really you've touched upon it affecting operations, affecting consumer interactions through chatbots, loans, and potentially regulatory. What else do you think it's going to kind of push us to, Vlad?
I think there's really no limit, honestly. I think that we're just scratching the surface at the end of the day, but we will see effects in every facet of our lives. The reality is that right now it all exists in a digital world. I think when it's going to start combining with physical devices, it will become fascinating. We're going to be living, Star Trek or Star Wars, depending on the scenario in any given part of the world. Unfortunately, these days, but I think that's becoming reality. I encourage the audience to go watch Star Trek: Next Generation and see what you're going to recognize from the devices and uses that were used back then. And then, if you really want to go down the rabbit hole, I suggest you go and do the original Star Trek.
I love that we're going to bring this back to some homework. Last thought before we jump to our next session. What are you most excited about when you think of neobanks and what that's going to enable for your consumers, for businesses, as we're driving towards this future, and it's coming fast? And try and give it to me in 30 seconds or less. Armin, come.
I think for me it's easy just to finally have a one-stop shop. It's good for banks and fintechs and neobanks to monetize customer relationships with multiple service offerings, from deposits to loans to payments. And we're not going to reach some ideal one bank to rule them all or one fintech to rule them all, but I think all the fintechs are going to do better at monetizing their relationships and providing more and more service to customers, so that you're not searching for the next thing and you actually have a close to one-stop shop. And that's what I'm excited about, to see more of that.
Vlad, last word.
I think that money is no longer a deciding factor who's going to win the race. I think it's innovation, being hungry, and being driven beyond what the other party is driven by. So in the end, it's no longer the money game. It's how quick, fast, and innovative you are, and how good is your IT department.
I love that. Grit and innovation is going to drive the future. This was a pleasure to kick off our first panel of today. Please give a round of applause to Armand and Vlad.